Sunday. February 12, 2017. I went on a tear yesterday with downloading charts, so I just run through them real quick. The first one here is VXX divided by VIX. Okay, VIX, I had an opportunity of buying that under $5 a few times. Okay, turns out to be one of the better products out there in bull markets. The old FYI, if the just leave them out there to trade, right? You go through a bear market and you're like, yep, I'm going to get all over this. And they go, no, we're going to retire this. And it's like, oh, you bastards. So, but that's here nor there. All right, just divided by this. What do we have? 2 hours, on and on and on, right? The market's going higher. The Russell sideways, trying to swing through it. Watch for that to become a leader, and then the money has to go somewhere, right? So do you pile it into, you pile it into the one that's already been moving momentum-wise, say like the NASDAQ or the S&P, or do you run it into the Russell? You run it into the Russell on the breakout. You're going to get more momentum. If it holds, it should hold for a couple of days at least, minimum, right? And that's what we saw the last time was a couple of days, and then it came back in. All right, so, but this is just a division thing. It's just an eyeball deal. All it is this is a ratio. We'll just say all-time low. So just watch it, all-time low, all-time low. It goes on for whatever, and all of a sudden it stops for whatever reason. All right. All right, netty gas. This is March of 18. Okay, so here we have March of 18. So sideways action, wiggle, sideways action, wiggle, sideways action. Okay. Greed says you have to come down to here. This is March of 18. What are you going to get? Slap one on. I mean, that's what you have to do, right? I mean, it's only pointing up. This is what you want. If it comes through here, you have to take it, right? 354. I mean, up to here, 364, right? Yeah, 365. So if they give it to you, ADX, okay, so ADX is reset, ready for some sort of trend. This is March of 2018, next year. What are we going to get? What are we going to get in March, April, May, June, or is it going to take off this way? We shall see. Whoops, that goes like that. All right, this is NIB. This is a cotton sub-index, blah, 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 yada, yada. But what caught my attention was this is the money flows coming in. You also have the contracts rolling over, so you could have arbitrage going on here too. So you had, okay, so I say there's arbitrage going on, right? And you're selling cocoa and you're selling this thing too or whatever. All right, so you're coming down to the bottom of the game here. And you have to cover some of this to take your March off the board. What happens if March cocoa spikes up 50 cents or whatever, $50, $100, well, $150. Okay, well, then this is going to spike too. So what I'm thinking is that the money came into this here, and you could see it's kind of the offsetting, but what it is this is over Thursday, Friday in cocoa, Thursday, Friday, right? Cocoa's been in a problem. It's one of those, the market just moves because the market is just oversold. Can't say that it won't continue on, but what I'm saying is that it's one of those where if you have a trailing stop on here and you get triggered in, it could be fast. Also have a nice little amount of volume down here. Cocoa. For all of those that you just tried to grab this thing all the way down, I just have to tell you some psychology behind it. But Kevin, we're running out of fingers. Can we use our toes? BKE, this is some sort of buckle whatever. Every once in a while this pops up on my doodle whacker here. It's kind of on the oversold on the unbalanced volume. You have kind of a goofy head and shoulders. It is retail whatever. I wish they'd take names and numbers off of these things. Maybe a possible horizontal here, 25, whatever, 20. It's at 21 and changed. It's lower highs, right? So all this is just one bar. It's kind of like the gold trade. Gold came down to here and then stalled, right? So maybe a swing possibility, whatever. Mergers, Buckle. It's a buckle. Everybody has to buy shorts. I don't know. It's suspenders. All right. Bond, B-O-N-D, PIMCO, just a slaughter and then a move up to here. Money's, it's one of the, they just keep pressing, right? Which is fine. More power to you. 2.8%. Have at it. I'm looking for 88 on bonds. You're going to be waiting a long time. Exactly. I don't have to worry about for 30 years. All right, this is the old Bitcoin thing that popped up on my little list of fun and games. This is a logged chart. I keep talking about reverting to the mean. What you do is just find a spreadsheet with the price traded from 12, 11, whenever this thing came on board. Take all those numbers and crunch it. Because what this is it doesn't make any difference. Okay, well, let's just say that this is the price of gold for right now. Okay, everything is based off the individual price. So if Bitcoin is at $1 or 1,000 or a million, they're able to break the money. Okay, right? That's very helpful. That's why Americans keep pennies around, because it does make a difference. But on here, whatever. I mean, if the thing is people buy these things, it's a scarcity, right? There's a scarcity to it, so they buy it and they hoard it. So there's a shortage of these things, and so like a float. All right. So you have that, but what happens is you have all the hoarding. So with any type of fracture, okay, the hoarding begins to unwind. Okay. And then that'll cause problems for immediate transactions. Everybody trying to jump on board this thing, as I keep getting pointed out. It's kind of like a Diner's card. Diners Club or whatever. Holy buckets, Kev. Yeah, Diners. How's that working? So, same type of deal. If it's 1,000, whatever, they can break it down. They have the decimal points. That's fine. But what I'm getting at is that you have that's the commerce. That's what they try to believe in with this thing for whatever reason. Everything has a tag on it, intellectual property, whatever. Yeehaw for accountants. So I don't care. All right. So like I said, if it's at 1,000 or 10 or 1, whatever the unit is, they'll still work the fraction because of the two-way commerce, how it changes hands. There's the amount of liquidity there. Can you basically make a transaction? Complete a transaction. I just threw some of this stuff on here for fun and games. Money flow. I came across that RSI ADX, which is running. Okay. This has some time. It's pointed in the upper direction. Hallelujah. But like I said, the hoarding, if it goes up to 12 or 1,300, that's fine. That's fine. But what I'm getting at is that this was a loss of 80%. But Kevin, that's how bull markets work. Okay. I'll go along with you on that one. Sure. There's your bull market. So, all of a sudden, if you buckle up here and dip below, 80% is 80%. Here's unbalanced volume, and they ran into it. So, I'm looking at this as, I don't know, how much of this stuff it can afford. You know what I'm saying? Just cautious. Just being Kev. Here's the volume. I guess what I've been told is some sort of Chinese saber rattling outflows of money and stuff. And I'm like, isn't this thing supposed to be anonymous? All right. So whatever, blah, blah, blah. Here's a flag. This could be a 1987 type deal, whatever. I don't know. All I know is that it was just going higher and higher and higher. And there was an RSI divergence prior to the collapsing here. ADX is still green. What time is this? 6-hour chart, 4-day. RSI and stuff did get whacked, whatever. So, what is that? 950, 930? What's the bodies here? 970, 970, 970, and then what? I'd have to go off the chart. Yeah, this, if it goes like ABC and it comes down 880, 870, ooh, 870. All right, so that's your 770 to 870, so it's a quick 100. Okay, so we just watch the ADX to see if a trend breaks out from, I will take a larger sideways, all of February, sideways. That's what it looked like. What do we have? 1100 to 750. What, that is an 87 type crash. Okay, no, it's not. That's only 25%. That was before it crashed. Ah. All right, so half onto here is 450. What do we have? It's all rising. It's got beat up pretty good though. ADX, see about an ADX. It was a pretty clean top. Yep, 2 weeks time. Whee! Then oopsie, and another small oopsie. Now that becomes a larger oopsie in the whole equation here. Well, this part's okay. This part, the angle of ascent, you know, because all of a sudden you start to trickle down to here and you begin to go, wow, we kind of failed here. So now you have a secondary distribution. What is that, 353? Yep, it'll be interesting. Okay, here's Australian dollar over Canadian iShare or currency shares. I look at these for sentiment because of spot forex. You can get ticks and estimates of volume, blah blah blah. But if there's any if there's a penny to be made, the computers will figure it out, right? So they have to splash their footprints on here. ADX, where are we here? Unbalanced volume. Okay, here's ADX, right? Okay. Coming back to here, ADX really isn't going, so it's good for the positive side on the Australian dollar. And on the Canadian dollar side, what I'm looking at is that the Australian dollar is kind of pressed up against resistance and trying to poke on through with currencies. And we also have gold in the dollar and then bonds, and that rolled over. So we're back to like, well, we got to see about what happens by Tuesday. All right. So what I'm looking for is if the Australian dollar cracks here, it's at a resistance level. DBC, here's the commodity one. So it's trading sideways too. This is DBC commodity, but the money is kind of, I'm looking for some sort of risk here. They are reset though. The, what is this here? The, is that average trading range? Average trading range in ADX. Okay. Bollinger Bands, no, not on there. All right, but the bodies are in there. Okay, this is, I'll just eyeball it. I don't touch it. I might as well just go trade commodities, right? Futures. All right, electric power. Now, I'm looking at this as a sideways deal after moving for a while, coincides with just electricity in general, economic. You have that Mother Nature, hot, cold, that kind of deal. It did swing down below the bottom here, and so that it should march higher. Okay, trend line under here. But I'm just watching it for right now with the sideways, just to see how, if this is going to react with interest rates and that, because money has to go somewhere in stocks. So that do they come out of utilities here, not because the economy is better, because it's a trading vehicle. That's some messed up stuff too. In the run of the metals in 1980, supply outstripped demand every year because people were bringing in their scrap. We had a huge scrap run. Bring in your silverware, bring in your, Oh, so much for silverware in there, huh? All right, so here's the sideways of the Canadian dollar here. I'm still treating this as a swing higher, same type of pattern from 1985 to 1990 in the Canadian dollar, right? If commodities do move higher, I'm looking for some sort of drought or whatever. Whatever. This is a pretty good drop right here. Oil's at 54. Copper is pressed up. They all are pressed up and stuff. You have to see if there's follow through on the Friday momentum to see if it carries through. What happens is you shake the tree on Monday, scoop it up, and then march it back down the field. But if it gaps, that's a different story. That's like, holy buckets. These guys are really bullish. All of a sudden the copper moved up and I'm like, okay, what do we use a lot of copper? Oh, This is a British pound and New Zealand dollar going back to here's 91, 92, 92, 99, 99, oh. What was that? Yeah, 99.01. Okay. Blah, blah, blah. What are we talking here? 10 years? 10 years? 10 years? Oh, you little bugger. 10 years. Well, I suppose, right? Just looking for cycles across the top here. Where are they? I'll deal with the hammers here. What was the move here? So 177 to 255 is about 8,000. All right. 235. See multiple hammers here on a quarterly. So this is fourth quarter and this is first quarter. All right. About halfway through first quarter, somewhere around in there. IWM. Okay. No, IVW. IVW. Cute. Growth ETF, whatever, blah, 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 blah. The deal is with the logged charts, the angle of ascent is picking up something fierce. Now, we're waiting for the Russell to confirm this whole kick-ass party that's going on. The pink dots aren't even, at best, they're going to join in on this here, but the angle of ascent is just something fierce, okay? Like I said, with logged charts, it's one of those things that it's like a rocket. It goes up, and there's no sputter, putter, whatever in rockets. They just burn out. Come on, you keep going. It's moving. Nifty. Okay, this is for India. Some of these that here, this is a daily, right? Yeah, so this is a daily up, down, whatever. On this, the part comes of, does it have a lower high here, right? That's basically how I'm treating this. One larger sideways pattern here. Does it come up, come down, and then run through, or is this a failure here? You have to look at the longer picture, Kev. North American NAT, North American tanker. So we're back to shippers. If the dollar is stronger, whatever, trade all over the world, blah, blah, blah. Unbalanced volume, non-existent. Okay, so nobody's into, this is part of that dries deal. I just put down accumulation. I'm just assuming that this is going to hold. This is why I hate equities too. How do I value this? But a lot of the stuff like the ADX is resetting. Any type of weakness in the stock market, like you hit them over the head just for one day, then you have to scoop this kind of stuff up. I don't know which is what is what. Maybe I'll call up Lloyd's. What's on the book? Lloyd's. I don't know. What do you guys got going on over there? By the way, can you share your data? Hundreds and hundreds of years of shipping records. All right, here is that Indian natural, what does it say? Oil and natural gas. Okay, watching this before is a 5 wave on here, big fat volume rolling over into the cloud, yada, 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 whatever. At best for the bulls, it's sideways, but it's just pointing out the pattern. They tried to go higher and a whole bunch of people said, you know, whoops. And bodies are still in here. So they're buying the dip. Okay. They're buying the dip, but this is overhead supply. You know, it's these people who got into, you know, at what point do they have to pull the plug here? You know, this is basically it. This is basically it. I mean, for these people, you know, if you're a seller, there's also a buyer, right? Vice versa. But what it is the price is coming down pretty hard, right? You're back to here. Here's where unbalanced volume was. It shoots on up here. And the price comes down. So you have a lot of people holding on in here, right? You should see kind of roll over, right? Should come with it. Here's money flow. So that's just numbers in general, whatever. And ETR. And then this is a Bollinger Band width. Yeah, so Bollinger Band width came from a low. Okay, that's this pinky one here. Bollinger Band width came from a low. Okay, so it's widening. So this is widening here. So at best, maybe for the bulls, they get it up to around 200 before it rolls over. And then this thing has to puke up. But it's just an oil and gas thing. Like I said, at the best for the bulls, it's sideways here. Right? But I'm just pointing out a pattern. What do we have here? Here's another one, Power Shares E something. This is London traded. Okay, so foreigners investing in American stock market. Bodies are rolling into this thing, but it had a slight double top on here. This is your, I think, stochastics and maybe MECD in here. All right, and Poipol here, the ADX. Okay, so the ADX is just hooking on the swing. The deal here is that it's the QQQ, but the sideways pattern, similar to the Russell. The Russell should be the focus because that's the one that's going to break out. If it fails, so, you know, what about the NASDAQ and the Dow? And, you know, do they, you know, which one is higher come Sunday night? You know, how's the breakout going to work? It should be big, right? All right, so CBA, some ultra short biotech. Here, I think it was just mostly the bars. It is getting washed out. This is the bear side, right? So this is just going after a package of sector, basically. I was just looking at it. Like I said, I downloaded a ton of charts. Here's Aussie dollar, Swiss franc. Okay. The whole breakout deal going on this thing here is attracting some attention on here. The Swiss franc side going higher I can deal with, but the Aussie side, I don't know if there's any of that in here. I mean, here's 09, here's 12, and that's the rollover of the commodity. We're only basically getting some of this here because of the commodity move. Here's 15, here's 16. So here's where it turned for the commodity deal, right? But it's attracting some attention here. So it's similar to the second mouse. See how it plays out. And if we want to enter on here, it hasn't had much movement. Big time. So this is what I wrote about just the whole stock market in general. It's a segment of the economy where 84% service. We're backstopping companies at capital. It's just insanity, but with trillions of zeros. Population is dropping, which means that we all have to assume more debt or come up with more wealth. Entrepreneurial talent, you know, create a perpetual corporation that sells water. This water. This is good money in water. All right, so let's just don't go into that. Just get out of your town now while you still can. Get out of there. All right, so this is basically just the stock market in general. Money goes in, wealth is created, blah, 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 you know, engineered. But just this part alone, I just treat it as a way for That's how I look. There's not much you can do, right? 200. We got to 600. What the hell's the difference with 200? Right? What? All right, so we're back to the Q puts again here. So I wrote January 19 at the money puts. Okay, so here the 128 puts basically trading at 14, which is minus 14 is 114. I go over here and I go 114. I go, well, 114 was like December and was it November? No, November, December. This goes out to 2019. All right, so then I thought, well, what's on the call side since we're swinging here? What is this one? We'll say 130, but we'll take 128. So they have a little less than that at 128. Close at 127, whatever. 14, the same thing again. So you go the other way. 14 onto that is 344, 144, which is more than that up in here. So this is a weekly, and the angle of ascent is increasing something first. They're pricing it that it doesn't. This is about the end of it. Between now and 19, what will happen is these will increase and then they'll fall off. All right. First, they're going to have volume to open interest. Classic Kevin. I'm going to tell you. Well, the deal is it's computer generated, right? So there's woo market making, just start marking it up and see if it attracts any attention, But it just gives me a reference point. I'm just thinking, well, 2 months ago you were at 114, and at the best on the upside, if I do buy rights, I'm only gonna, it's like you'll snag this. It's in the cards. Are you willing to risk the buy and the right on the option? You buy, someone will pay you. You buy, what's a 128 call. If you buy it at 127 and change, they'll give you, well, here's 12 to just get it off, but 13 and a half, whatever, 12.70, 30, we'll say 13, whatever. We'll say the market goes up Sunday. All right. We'll just say. Opinions out. No. We need to just mark this thing up and get it over with. Come on, you guys. Stop farting around. All right. So 44. On here's 138 and 128 and 111. Okay, so 111. This is a Q's. But all it was just pointing it out. If you want to do a buy right, you think what did I say? 114 the other way. So back to this one. If you don't think it's going to buy the stock, and write the option, and 120, you make 75 cents plus on here. So we'll just say 114. Let's say 113. $13. What is that? 8%. 10%. A little under 10%, right? 27. Yeah, 12. Blah 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 blah. 13. Yeah, that's pretty good. Pretty good. But the risk, that's all I'm saying. That's all I'm saying. You can go straight. I don't care. My whole thing is to watch for the risk. What is the risk here? The risk is that this angle of ascent is increasing something first, and now we're going to get the Russell involved, hopefully, right? Here's our Russell, IWM. All right, so Pokey Poke comes on through, sitting here doing the whole sideways thing. This is a monthly. So here's an oversold, unbalanced volume down here, blah, 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 yada, yada. We're adding. Well, of course we're adding. That's exactly what it's showing, but they're adding at what point? I look at everything this year. There's a monthly. The target, whatever happens up in here, even the target is the S2. That's all I'm looking at it here. This can come back to here. That's fine. We'll just call that consolidation. Just come back and test this one or poke down there. Go for it. Here's this right from here to here is all we've done from the election. Okay. Couple of months in. Now these are logged charts. So, a dollar is a dollar. how many can you buy at 130, 127, 28, 135? What did I say? What's that? 121, 151, 167 on here for IWM. Okay, but it's in relationship to where it's at. The body's after all of this, right? That's all it is. Back here, this was out of favor. It was the commodity sector. This is what's in favor now of these little itty bitty deals. That's what we're doing. There's obviously if they're not in the commodity side of things, then they must be in something else. Commodity side blew up. Hey, what do you know? Little growth stocks, people who need cash, raise capital to run a corporation, limited partnership, whatever. All right, so the swing's up to here, but it's all a relationship to where we are at in the big schism of stuff. ADX is turning up here though, and the Bollinger bandwidth, so it's widening. But for here, it's the whole pink dot thing. Pink dot, pink dot, it was sideways, what I'm looking at is, shakiness V-top stuff. And remember, it's like trading futures up here. Okay, now when we're trading futures, a 1% move on these, they're going to be a little bit more than a 1% move back here. Woo! That is a 3% range. That's why we live for this stuff. Okay, my bias is caution. My bias is always caution. Check it into the wind, But the part is the pulling of the chairs when the music's over on here, okay? Because the Russell is breaking out, okay? China lodging, whatever. The spike here was the fade. There was here, I guess this is an update. So you have a fade here. You get another one up in here, and you have another one up in here with the thinner bars, and it's kind of went up and sideways on here. Not much interest going on in this. What is that, a 5-wave pattern here? This is HT. I think what it was just watching. So what is it, 53 to 45, $8? So what do we have here? We could actually come back down to 42 from here. We'll have to update the lines. I think it came up as a scan for an earning or something. All right, Fed fund rates. Okay, so this goes back to 1963. This is probably your mean on your Fed funds, about 4%, 375, whatever. How about we just get it to 2%? All right, so we're chugging along here, blah, blah, blah. This is the US dollar on top of it here. These are going to be targets that people are going to aim for, but I need to do a relationship of the Fed funds versus the dollar. Causation, correlation, how well correlated are they here compared to the previous high when we're talking 20%, the previous high when we're talking 6.5%. Here's 5.25%. We're only pegged out till I think somewhere plus or minus $2. Okay, going into, wasn't it 2020, something like that, 2021, that kind of thing. So that's fine and all dandy. What's this here? Fed funds correlation to US dollar. Hey, what do you know? They are correlated. Strong correlation. All right, so we did see some weakness on the front end of the Fed fund futures where people were kind of like, hey, are we going to get a rate hike in March? Not sure. So now we have commodities and stuff against it. Oil's pressed against the upper end kind of thing. We need to give everything 2 days. We'll say Sunday, Monday. Because we're professionals. We work 6.5 days a week. 6.5. But Kev, you like it. Yeah, well. Killing me with his time. All of his time. All right, so blah, 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 yada, yada, yada. Exxon Mobil, blah, blah. We'll just, what do we have here? Stochastics and MACD kind of thing. It's just dead money, like Exxon Mobil here, whatever. Go for the yield. I don't care. My deal, it was wherever it was at the beginning of the commodity cycle. Back in here, this is where I'd show up and go, hey, I did jump up and down. Woo! And this, I'm not interested. Right calls against your positions by GDX. All right. So we did have the ADX move high on here, right? Yeah, so ADX cracked. So the deal in gold is probably more sideways than up for right now. That's how I'm going to lean on that. It held the 50% here at the RSI. So what do we have here? 2-hour chart. So this is oversold, overbought, divergence here. ADX stopped. So at best, this could be more, but you're against resistance here. That's right. Gold came off. Gold didn't do so hot on Friday. Oh, what do we have here? We have whatever this moving average is, a 200. Okay, so here's our low. So what do we have here? So an AB, a sideways pattern here. It's corrective here. Yeah, everything, you have to wait here. GDX again. Money's swinging into it here. What do we have? 2-hour chart. Okay, so we hit the run up, pull back, and then I was watching gold on Friday here, so we got about halfway, and I think pulled back here. Money's coming in. They're kind of bullish here, short term on the gold. Okay, so here's one here. Gold comes down for 5 years, bounces for 3, comes down for 5 years, bounces for 1, 2, next year 3, right? Gold kind of peaks out as we roll into the recession, as we roll into Mother Nature's, we get a spike in Mother Nature related commodities, that kind of thing. And that's that. Then we, now we're talking third quarter of 18, fourth quarter of 18, recession. Man, can you believe another decade's gone by? Recession. All right, golden. Okay, here's a goofy one for you. Goofy. Here's the gold divided. The gold Dow. Yeah, ratio. Dow gold Dow. What is this one? This is gold versus the Dow. Gold peaked out here as a runner. Now stocks have been outperforming. What is this monthly for 2 months here? Basically, it is oversold on this. So being long gold. So what do we have? Inflationary type of deal. So what did I say? 87, 88, 89 kind of deal. And then 90, we get something, right? Oh boy, look at what we pulled out of our hat. All right, this is the home building. Talked about this as maybe a pause in here. Home, whatever. Houses sold. New one family. VXZ. Looked at this once before when it fumbled around down here, I think it was. Oh, this is the medium one, mid-time futures type of deal. You're swinging up and prices isn't going anywhere. So is that an accumulation then? I don't know. We shall see. But that's the whole deal. How many more times can you say buy VIX? I gotta buy insurance, son. Buy some insurance. But somebody bragged to me that they're just totally short this stuff, and I'm just like, okay. But that's the whole deal. How do you sell more insurance? You create a disaster, right? If you thought shorting VIX at 12 is cool, wait till you short it at 60. VXX, same type of deal. I'm just like I said, I'm running through it, and a lot of slip of hope on there with you little bugger. Came down. What did he have? 10 to 20? Hold on. What? Oh no, it says 18. That's what I thought. Woo! Open up your eyes. Yes. All right. There's the VIX again on here. Unbalanced volume. Wish that was RSI. You can see people buying the dip, and then puking it up. Now they're, right? Price comes down, unbalanced volume, they're buying the dip. Buying the dip. Come back through. Here, we kept cleaning them out. We made a new low, and they're kind of hanging on. that ratio again. Okay, what do we get? IWM. Okay, so here's IWM. So with Russell Futures, we have a large sideways pattern, December, January, February. Okay, something's going to crack on here. This is a 2-hour ADX and RSI. Okay, so we'll skip the RSI for now because it's going to be jammed right away like this. All right, this is post-election. This is the gap and go video. Whee! Okay. December, yeah, January. Okay, so large sideways pattern. It's breaking out. Watch the ADX for now. The deal is this has, the other indexes are pointed higher. This one has to come along, and we should get the turn in the pink dots on the New York Stock Exchange and the composite. But we're coming back down to the dollar and bonds and stuff. You know, what happens if we push through the bottom of debt market and rates poke higher here? That would kind of follow things up for the summer here. But maybe money's moving into the system a lot quicker. We shall see. But this is a 2-hour chart put up, like, you know, whatever, a 2-hour chart, the daily and the weekly, whatever, and trade off of those. This should be a persistent move here, right? So you could put 4-hour chart and whatever. This is 2, and this was pretty good. This worked pretty good here. Here's a 2-hour, same type of deal. So here's the pink dot. It should just march. Should just march, right? Pipelines. I thought this was kind of oddball that we had issues with pipelines here. This isn't the only one. DBA again. Yeah, I want a bumper crop this year. Well, I suppose. What is that? 20, 23, $1.50, 5% plus. I'm short side. Russian bank. All right, so we have oil. This was the short angle. Where are we here? Came back, breakout, retested. Okay, ran up higher. Now we have a whole sideways thing going on. And I know why this is going after oil. I'm sure this is going after oil for 45. All right, on balance volume and everything's up here. So we're $11 talk down to $8.90 or something. What's down here? $10. So it's not that much. It's just a couple of dollars. It's traded in London. Yeah, it's whatever. That's what it is. This is short for the oil. Russian oil. Okay, interest rates go higher, dollar goes up, oil's going to come off, copper's going to come. In theory, right? Gold's going to come up. Dollar's going to probably go to 101.5. What do you hear? The XIV. Yeah. What are you? The XIV. Yeah. Gosh, it's just, I'm just going, just wake me up. I'll be in the hammock when it gets to $5. Call me. Because this came out after 2011. You know, in theory, it's probably going to fall a lot more than that. Daily inverse in a bear market, it just keeps getting chew and chew and chew and chew. Hallelujah. All right, so I posted this. So these were just some of the pullbacks on the stock market on the way after the blow off of 2000 on here. And this is the Wilshire total market. Okay. So you get China to do the whole World Trade Organization thing here. We get a pickup, pretty much the last of the good working years. Right? Let's be honest with ourselves, because we all know the difference. Here's a 10% pullback, a 10% pullback, 10% pullback. Now remember that the Russell had, what was it, a 38% pullback? The total market dropped 20%. All right. Long-term capital management, the Thai baht, Russian, it bled over to the Russian default. Oil hit $10, and then for us, we got into the whole internet.com thing and people went bonkers. And that's a 13% drop. What do we have? From August, what do we have? July, August. So we'll say August to October. a 13% drop, and then just the blow off. And it came on down. But those were just some that on the way up, you know, like what happens if we get something like this coming into 2019? You know, we'll see. We shall see. Oh, look, here's an 8 and a 9. Here's a 7. 7. We're in a year with the 7. So what do we have? 7,500. Well, what do we have down here? 7,000. We'll just use 7,000 and 9,000. 95. That works. Blog chart? You betcha. Okay. But that was just, and yes, I was going to, you need information, right? You get it from the government, right? Because that's what they do. So I go to the CIA to look up all the countries, you know, just, you know, what do we have? What do we have on everybody? Well, and it said, I shit you not, it said USA's biggest enemy is frothy equity price. I mean, it wasn't that for, you know, it was highly educated, you know, doctorate type people. I mean, they work at the CIA, man. All of it. I mean, if they're like scooping up leaders' poop, these guys are off the rails. All right, so here, let's make sure the day on this one here, blah, 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 the 10th. Yeah, that'll work for me. Okay, pink dots. This is the summation index. You know, divergence here. This is the NASDAQ, right? So we have the NASDAQ taking off. We have the Russell breaking out. You know, and we have our smokestacks on here. It comes down to the dollar. Okay. Then, you know, in my eyes, these pink dots would have to come with. Why? Because what it is it's saying all these other stocks aren't participating. And when you run out of money, you're not running after the $100 stocks. You're running after the cheapy ones. You know, I'm going to buy this because of the whole sector is on fire. Well, it doesn't work that way. But I have to I have to look at this as this isn't good, right? We should have some sort of everything flowing with it. You know, so this isn't good. So I'll lean, though, that the pink dots will come with this. But that's still not, you know, what do we have? Tax season? Well, there you go. Mark the stuff up and put it in your IRA. And the other one is here is that the market from the low, okay, over a 100-year period, the stock market goes up 30% in 1 year, 23% of the time. Okay, so it's about twice a decade. All right, what I'm doing is I'm taking this one here because we've gone 30%. I'm saying that this is close enough, you know, so it didn't have the calendar thing. It's just the movement here. Okay, so, you know, I'm using this as one of them here because you do the same type of deal here where you have a strong movement higher, then it corrects, strong movement higher, and it corrects. Bumper along in the tooth. Natty gas, that didn't very big.